on the fiscal year 24 Early Childhood Educator Pay Equity Fund webpage. And with that brief technical overview, I'll announce our speakers for today. This afternoon, you'll hear from Hannah Matthews, the Director of Policy Planning and Research in the Division of Early Learning, and Sarah Mead, the Deputy Superintendent for Early Learning at OSSI. Before handing things over to Hannah and Sarah, I'll walk through our agenda. So we will start out today's session with an overview of the provider agreements for fiscal year 2024 of the Early Childhood Educator Pay Equity Fund. We'll then highlight the fiscal year 2024 waiver process, and then there will be time for Q&A before closing out. And with all of that, I will pass things over to Hannah.
Great. Thank you, Julia, and hello to everyone joining us today. As Julia said, we're going to begin to provide an overview of the provider agreements for the fiscal year 24 Early Childhood Educator Pay Equity Fund. I want to remind folks throughout the call, please feel free to submit questions during the presentation using that Q&A feature. Now, as you know, in fiscal year 2024, OSSI will shift to distributing pay equity funds directly to child development facilities to increase compensation for early educators through what we call a Child Development Facility, or CDF, payroll funding formula. That means early childhood educators will no longer receive direct payments through AidKit. To receive funds from the CDF payroll funding formula, child development facilities must be licensed by OSSI and agree to pay eligible early childhood educators by position and degree salaries that meet or exceed minimum salaries that OSSI has established for fiscal year 24. We'll talk more about those minimum salaries later in the presentation. The opt-in process for a child development facility to participate depends on whether or not a facility participates in the child care subsidy program. Non-subsidy providers must complete the fiscal year 24 Early Childhood Educator Pay Equity Fund provider agreement. Subsidy providers must complete the fiscal year 24 Early Childhood Educator Pay Equity Fund addendum to their subsidy provider agreement. Now, the provider agreement and the subsidy addendum include the same requirements for participation in the Pay Equity Fund. It is only the process that is different. On today's session, we'll go over the requirements that apply to all providers participating in the program. Some of these requirements will be familiar to subsidy providers, and some will be new. All providers must comply with all terms of the agreement or the addendum. I'll also note that OSSI cannot modify the terms of the agreement or the addendum for individual facilities. Now, on this slide, you can see the deadlines for opting into the program and completing a provider agreement for each quarter. To receive the first quarterly payment, facilities must complete the opt-in or application process by 5 p.m. on September 15th. That is tomorrow. You must then have an agreement executed by 5 p.m. September 30th. Please be mindful of the quarterly opt-in application and agreement deadlines shown here if you'd like to participate in the program. Providers who opt in by the Q1 deadline, tomorrow, will need to ensure that their staffing information is up to date in DELT by October 31st. We'll talk about why that's really important. A child development facility will only need to apply once and complete one agreement for fiscal year 24. Once the agreement or the addendum is in place, you will automatically receive the remaining fiscal year 24 quarterly CDF payroll funding formula awards, as long as you continue to meet the requirements of the program. Should you not opt in by the first quarter deadline, you may opt in for the following quarters. Providers newly entering into agreements will receive payments on the next quarterly cycle following approval of the provider agreement. Next slide. So here on this slide, you can see all of the topics that are covered in the provider agreement. I am not going to read this list to you, but we are going to discuss all of these topics in this presentation. So hope that it's useful as you bear with us covering all of this material. So the first section of the provider agreement describes the CDF payroll funding formula and how it is calculated. The CDF payroll funding formula now has 4 components: the base award, the administrative enhancement, the equity adjustment, and new, a fiscal year 24 supplement. These 4 components will be calculated and distributed once per quarter. The quarterly award for each facility will be the total CDF payroll funding formula award divided by 4. Now, just last week, OSSI announced that we would increase CDF payroll funding formula award payments for fiscal year 24. The equity adjustment has been increased for facilities that participate in the subsidy system, and we've added that fiscal year 24 supplement. We're really excited to be able to expand the CDF payroll funding formula in this way. For examples on how to calculate the formula, we encourage you to look at the CDF payroll funding formula guide, and we'll drop links to that resource in the chat. I'm going to walk through briefly an overview of the formula. Next slide, please. So here you can see the base award, which is the main driver of the funding formula. The base award is calculated by multiplying the number of teachers in a facility based on role and credential or degree by the corresponding wage supplement, and then summing the total. I'll explain the wage supplement in a few slides. It's important to know that the number of teachers and the credential levels in that left-hand column are based on staffing data reported by a facility or DELT. Here you can see a graphic representation of the base award calculation. Child development facilities that receive funds from OSSI must pay eligible lead teachers and assistant teachers who are in the following staff types in DELT, those minimum salaries that I mentioned. Only teachers and assistant teachers will be included in the CDF payroll formula calculation. There are 4 staff types in DELT that qualify as an assistant teacher for the purposes of the Pay Equity Fund program. They are assistant teacher, Montessori assistant teacher, PKEEP assistant teacher, and an associate home caregiver. There are 4 staff types in DELT that qualify as a teacher for the purposes of the Pay Equity Fund program. Those 4 are teacher, a Montessori teacher, and an expanded home caregiver or a home caregiver. Both are considered teachers for the purposes of this calculation. Next slide, please. The required minimum salary and corresponding wage supplement will be based on the highest credential or degree held by an educator, as documented, reviewed, and approved in DELT. For lead teachers to qualify for what we call the BA wage supplement, teachers must have a bachelor's degree or higher in early childhood education, or a bachelor's degree or higher with greater than or equal to 24 credit hours in early childhood education. To qualify for the AA wage supplement, teachers must have an associate degree in early childhood education or an associate degree in another field with greater than or equal to 24 credit hours in ECE. To qualify for the CDA wage supplement, teachers must have a CDA or 48 credit hours with greater than or equal to 15 hours in early childhood education. For assistant teachers, to qualify for the AA wage supplement, assistant teachers must have an associate's degree or higher. To qualify for the CDA wage supplement, they must have a CDA, and they'll qualify for the less than CDA wage supplement if they have less than a CDA. Now, we've been talking about the wage supplements. The wage supplement is the difference between the average salary and the minimum salary requirement for a teacher based on role and credential. The average salary is a district-wide average. It is not based on individual salary data in a facility. We came up with the average teacher salary based on responses to the 2022 Child Care Provider Survey that many of you may have completed. We understand that the actual salaries paid to educators in your facility may be different from the average salary, but the wage supplement will be the same by role and credential for all facilities participating in the Pay Equity Fund. In part, OSSI added the fiscal year 24 supplement to the Early Childhood Educator Pay Equity Fund and to the formula to be able to help those childcare facilities that currently pay their staff less than the average salaries listed here. So they will have sufficient resources to meet the minimum required salaries. Because the base award is calculated based on information that is entered and approved in DELT, it is very important to be mindful of those provider deadlines for entering staff records in DELT prior to the award calculation. CDF payroll funding formula awards, as I mentioned, will be recalculated each quarter. Providers must ensure that staff records are up to date and accurate so that all teachers and assistant teachers are included in the calculation and included with the appropriate highest credential level. Providers who have completed agreements by that first quarter deadline, September 30th, will need to update staff records in DELT by October 31st. After that date, OSSI will calculate Order 1 CDF payroll funding formula awards based on information in DELT. On this slide, you can see those deadlines for each upcoming quarter to make sure that the records are updated. If you require assistance updating staff records or have questions about staff credentials, please contact your assigned licensing specialist. I also want to note that OSSI licensing regulations require all child development facilities to maintain up-to-date staff records in DELT, regardless of participation in the Early Childhood Educator Pay Equity Fund. So this is not a new requirement. Okay, moving on to the next component of the CDF payroll funding formula calculation, the administrative enhancement. The administrative enhancement is calculated by multiplying the base award times 15%. It provides funds to facilities for increases in mandatory payroll taxes and other possible expenses that the facility may incur from participating in the fund. Next slide. The third component of the formula is the equity adjustment. As I mentioned, this has been revised since OSSI first published the payroll funding formula. The equity adjustment now equals up to 60% of the base award, and it's calculated based on the facility's subsidy enrollment as a share of its licensed capacity. Previously, the equity adjustment was equal to up to 40% of the base award. This change increases the amount of each program participating in subsidy from the originally published formula. The equity adjustment is intended to direct increased funding to child development facilities that serve families and communities with fewer economic resources. Facilities that do not participate in the child care subsidy program will not receive equity adjustments to their base award. Now, the final component of the formula for fiscal year 24 is the fiscal year 24 supplement. This is a new addition to the formula. OSSI is increasing fiscal year 24 awards to support facilities in meeting minimum salary requirements in the first year of the program's implementation. The fiscal year 24 supplement is 30% of the sum of the base award, administrative enhancement, and equity adjustment. So all facilities will be receiving an award that is 30% larger than previously announced. Now, a final note about the CDF payroll formula calculation. OSSI will not make adjustments to quarterly payment amounts based on changes in the number of lead and assistant teachers employed in a facility or their credentials that occur after the deadline for updating DELT. If you experience changes in staffing after the quarter deadline, you should update staff records prior to the next deadline, and you will see those updates reflected in the following quarter's payment. Now, I'm going to move on to talk about overpayment and underpayment of funds. Each quarter, providers will receive a pay statement that includes a list of the eligible educators in each facility who are included in the CDF payroll funding formula calculation. Providers will be able to view the award calculation and the amount so that you'll understand how we came up with that amount. Providers should notify OSSI within 30 calendar days of receiving the payment statement if they believe there is an error in the calculated payment. Providers who believe there is an error must be able to provide documentation to show why the calculation is inaccurate. Additionally, if the quarterly payment differs from the payment statement, the provider must submit an error report to OSSI within 10 calendar days of receiving the quarterly payment. All overpayments, regardless of size, must be reported to OSSI. OSSI will recover overpayments through deductions from future quarterly payments. Any underpayments will be added to the next quarterly payment. Now, the agreement also details the allowable uses of funds. We have shared these uses previously on other information sessions, and we'll repeat them here today. CDF payroll funding formula awards may be used in the following ways: to meet minimum salary requirements for lead and assistant teachers, to pay staff wages or compensation for additional educators and other child development facility employees, to pay costs of health and other fringe benefits for early childhood educators and other employees, to pay administrative costs associated with implementing the minimum salary requirements and or meeting OSSI requirements related to the Early Childhood Educator Pay Equity Fund, and to pay direct operating expenses of the facility associated with providing care and early education services to children. A provider that operates multiple facilities may not use funds to cover costs associated with facilities that are not participating in the fund, and may not use funds to cover costs associated with facilities that are outside of the District of Columbia. Moving on to requirements related to staff wages and salaries. After receiving the first quarterly payment, providers must pay teachers and assistant teachers, as defined by the Pay Equity Fund, salaries or wages that meet or exceed minimum salary requirements by role and credential. Providers can use the annual salary figures for staff who are paid on a salary basis, or can choose to use the minimum hourly wage figures shown here for staff who are paid on an hourly basis. Note that those minimum hourly wage requirements are the equivalent of the annual salaries. They are different from the minimum wage in the district. Participating providers must meet the minimum salary requirements through hourly wages or annual salaries through a regular paycheck. That means the funds are not to be used to provide supplemental or bonus payments. They must be provided in the form of regular pay. Participating providers will be required to upload payroll records and related documents in DELT on a quarterly basis, which OSSI will monitor. Providers will also be required to adopt a salary schedule that outlines minimum and maximum salaries for lead and assistant teachers by credential. Providers must upload the salary schedule to DELT as well. Please note that providers may choose to use the salary schedule that OSSI has published, but are not required to do so. And on the next slide, you can see OSSI's sample salary schedule. Now, as I said, this is only an example. You are not required to use it, but you can see here that the idea is that the minimum salaries must align with the minimum salaries that OSSI has put out. And then you can choose to create a salary schedule based on experience and define those steps. The agreement requires providers to provide every lead teacher and assistant teacher with a formal letter or contract that states the employee's name, their staff type in DELT, their location of employment, their anticipated hours or work schedule, their annual salary or hourly wage, and what benefits they are provided. The contract or letter must be signed by the employee and the employer and must be updated if there are any changes in the terms of employment or compensation. A copy of the contract or offer letter must be maintained in the employee's staff record in DELT. For each lead or assistant teacher covered by the fund, in addition to any other staff person whose salary is paid either in whole or in part by the formula funds, the facility must maintain up-to-date staff records in DELT. The complete records must include the base salary or wages for an employee, which again may be provided in an hourly or annual format, the staff's participation in health and other benefit programs, documentation of the employee's offer letter, employment contract, or other documentation reflecting the employee's salary or wages, and documentation of staff credentials as required by licensing. These records will be reviewed, updated, and submitted for approval by licensing staff by the quarterly deadline established by OSSI. In addition to staff records, we are requiring providers who participate in the Pay Equity Fund to share enrollment and tuition data with us. Providers must provide quarterly a report on the facility's total enrollment by age of children served and the number of enrollment vacancies. This data is intended to help OSSI to better understand enrollment and vacancies across the district, and then be able to use that information to target supply building investments and supports for providers. Providers will also need to provide OSSI annually a schedule of tuitions and fees charged to tuition paying families. The goal here also is to provide OSSI with better data so we can understand tuition trends over time. This will also eliminate the need for OSSI to conduct a market rate survey to understand tuition. We are also interested in tracking whether or not the Pay Equity Fund program impacts what parents pay for childcare in the district. We will not be making any requirements on programs related to tuition or use information provided by individual programs to evaluate tuition. This really is for OSSI to have the ability to better understand tuition across the district and enrollment. Next slide. The provider agreement covers fiscal requirements of the program. Providers must maintain workers' compensation insurance for all employees. Every business in the district with employees is required to carry workers' compensation insurance. Providers must also comply with the district's Living Wage Act of 2006 and will need to show compliance by signing the District of Columbia Living Wage Act affirmation form. This form will be provided annually to OSSI. The Living Wage Act applies to all programs that accept money from the district and applies to employees not otherwise exempt, so including those not covered by the Early Childhood Educator Pay Equity Fund. For facilities that participate in the Pay Equity Fund must pay the minimum salaries established by OSSI to eligible teachers and assistant teachers, and must meet the Living Wage Act requirements for other employees. Currently, the Living Wage Act requires a living wage of $17 an hour, which is currently the same as the minimum wage in the district. Providers must also comply with the district's Universal Paid Leave Act. This requires all employers to offer paid leave benefits to eligible employees and requires employers to pay a payroll tax to fund these benefits. OSSI is requiring that participating programs allow OSSI to conduct annual classroom observations and evaluations. Subsidy providers are already meeting this requirement through their participation in capital quality. For non-subsidy providers, this requirement may be new. We are not requiring participation in capital quality. We are just requiring the annual observation and evaluation. Having information on the quality of early childhood programs is important to OSSI to target quality improvement strategies and professional supports for providers. OSSI will share with facilities program-level results of observations so that facilities also have better data about classroom quality. Facilities may choose whether and how they wish to use this information. OSSI will not assign a rating or a quality designation to a facility that is not participating in capital quality. OSSI may include the results of observations in aggregated reports that include information from all observed licensed child development facilities, but we will not disclose information that is specific to a child development facility. At times, OSSI also shares the results of observations with independent researchers who are studying early learning in the district. And here too, we will prevent the disclosure of any information specific to one child development facility. Now, moving on to records and the need to keep them and OSSI's right to inspect them. It is important that any records related to the Pay Equity Fund program be maintained by facilities. This includes copies of employee contracts, offer letters, salary schedules, all of the other documents that we've mentioned and that may be necessary for the agreement, and they should be retained for a period of no less than 5 years. If there are any administrative or judicial proceedings related to the Pay Equity program, records should be retained until the conclusion of such proceedings, even if it's longer than 5 years. OSSI will also reserve the right to inspect and copy all records related to the program. In the coming weeks, OSSI will outline with more information the monitoring as well as the auditing processes for the Early Childhood Educator Pay Equity Fund. All providers must cooperate fully with monitoring and auditing processes. Providers will be monitored quarterly for compliance with the minimum salary requirements through review of payroll records and other documents. All providers will be monitored. OSSI reserves the right, a subset of providers will be audited, and OSSI is going to reserve the right to audit any child development facilities flagged and dealt based on irregularities in staffing patterns, such as unusually large numbers of staff employed relative to the number of children enrolled. The agreement states that providers are responsible for the payment of all taxes and fees incurred from any Pay Equity Fund payments. Now, as early childhood educators' salaries increase, mandatory employer payroll taxes will also increase. The provider is responsible for paying all employer taxes and ensuring appropriate employee tax withholding on salary payments to staff. If you have questions about any impacts related to taxes, we recommend consulting with an accountant or another tax professional, and also advise any employees who may have concerns about tax implications of the new salaries to do the same. Moving on, indemnification and the availability of funds. So first, indemnification, this is a legal term to ensure that a party is protected from legal liability. It is standard contracting language. The agreement states that the district and its agents are protected and held harmless from any possible monetary liabilities that could occur as a result of actions taken by a provider related to the program. I also want to share that the agreement notes that the district's financial obligations to pay providers are contingent upon the availability of appropriated funds as approved by DC Council and subject to associated statutes. Now, again, this is standard language to include in a district government contract. It's the same language that is in the subsidized child care provider agreement. It does not mean that OSSI anticipates that it will run out of funding for the program. OSSI is planning to implement the program fully this year and in the coming years. The Pay Equity Fund was created as a long-term funding mechanism, and we will continue to administer it as such into the future. Duration of the agreement. The agreement will be in effect from the date that it's signed by OSSI's Deputy Superintendent of Early Learning, so that signature needs to be in place for the agreement to be fully executed, and it will be in effect through the remainder of fiscal year 2024, which ends September 30th, 2024. The agreement may be extended annually, provided written notice is given by OSSI to the provider, and the agreement states that it may not be extended more than 4 times from the original date. OSSI will notify all providers participating in the Pay Equity Fund of agreement renewal or extension procedures at the appropriate time as we head into fiscal year 25. Child care providers that opt into the Early Childhood Pay Equity Fund will also have the option to end their participation. The agreement lays out the process through which they may do so. Should a provider want to terminate participation, they must report to OSSI prior to the 15th day of the first month of the quarter in which the provider intends to terminate the agreement. Providers who opt out by that date will not receive additional CDF payroll funding formula payments unless they are owed payments as a correction for past underpayments. Should a provider opt out of the program, they must continue to pay eligible staff at least the required minimum salaries until the start of the following quarter. So for example, if a facility receives funds for Q1 in December and decides to opt out in January, that provider must pay the minimum salary requirements through March of 2024. The agreement also states that the district may terminate the agreement for any reason effective upon receipt of written notice. The district shall provide the provider a written notice of termination specifying the reason for termination and the applicable dates. OSSI reserves the right to monitor the provider's documentation of compliance during the quarters in which the provider participated in the fund, even after a provider opts out of the fund. So more standard contracting language. The agreement may be modified, renewed, or extended in writing only, and the parties must sign and date any modifications to the agreement for them to be valid. Should OSSI need to amend award payments based on any actions of the DC Council, OSSI will modify the agreement unilaterally. In the event of a reduction in funding, OSSI will provide guidance to facilities on any adjustments to the minimum salary requirements. Now, again, I want to underscore that language related to potential reduction in funding is standard in district government agreements. It does not indicate that OSSI anticipates a decline in funding for this program in fiscal year 24 or the future. Now, this slide covers a few different topics. The agreement lays out the process for resolving disputes, should there be any, between providers and OSSI. OSSI will attempt to resolve any disputes informally, and if that's not possible, through written statements and an appeals process that is laid out. The agreement ensures that the district is not liable for any injury, claim, or loss to person or property as a result of performance of the agreement. And finally, again, standard contracting language asks for providers to name a representative to receiving any outstanding payment in the event of incapacitation or death. Now, there is also provision in the agreement that states that any newly created employee positions must comply with the District First Source Act. This act requires at least 51% of all new jobs created as a result of a contract to be performed by residents of the District of Columbia. This is standard contracting language again. It is also included in the Child Care Subsidy Provider Agreement. I want to clarify that the requirement does not apply to existing staff, and it does not apply to filling vacancies in positions that existed prior to a facility's participation in the Pay Equity Fund. So it does not mean that 51% of your employees must be residents of the District of Columbia. It only applies to employees who are hired as a result of the contract. And in general, OSSI does not expect that child development facilities will be hiring new staff as a result of complying with the agreement. Remedies for noncompliance. OSSI will investigate all allegations of misconduct and noncompliance related to the program. I want to note that OSSI has reworked its process for addressing noncompliance, and so the language that you see here on the slide is slightly different from the language in the sample provider agreements that we have posted on our website. We'll be updating those soon, but here is the process as it has been revised. Providers will receive a notice of noncompliance and will have the opportunity to correct the noncompliance in a time period that is designated by OSSI. Providers may also appeal any determinations of noncompliance. Following 2 infractions of noncompliance, OSSI may publicly identify the provider as being noncompliant on the My Child Care DC website. And following 3 infractions of noncompliance, a provider may be terminated from the program for a minimum of 1 year. Again, providers may appeal a determination of termination. All noncompliance and termination appeals will be reviewed by OSSI, and all review determinations will be final. The agreement goes on to clarify the actions that OSSI can take in response to a provider's failure to comply with the agreement. These include temporarily withholding payments, wholly or partly suspending or terminating the current agreement, not exercising options to renew the agreement at OSSI's discretion, recouping any overpayments based on audit findings, investigation findings, late termination or calculation errors, and taking any other actions that may be legally available. Any provider who obtains funds as a result of submitting falsified documents, information, or data shall be required to pay back those funds to the District of Columbia government. Any provider who is confirmed to have violated the requirements of the provider agreement may also be referred to the OSSI Licensing and Compliance Unit or the District of Columbia's Office of the Attorney General for further action. OSSI shall disallow any costs or payments that OSSI determines were not expended in compliance with the agreement. Any expenses that OSSI is unable to verify whether they were expended in compliance with the agreement due to the provider's failure to retain or provide appropriate documentation. Providers will be obligated to return all disallowed costs or payments regardless of size. Now, the very last sections of the agreement address a couple of different things. The agreement states that it supersedes any and all prior agreements between the provider and the district regarding the Early Childhood Educator Pay Equity Fund. So again, that's just contracting language. That means the agreement you're signing is considered the most recent and up to date. The agreement states the parties may not assign or transfer the agreement or any right or obligation of the agreement by operation of law or otherwise. In other words, the agreement is non-transferable. If a provider were to sell their facility to a new owner, the new owner would be required to enter into a new agreement. The pay equity agreement itself is non-transferable, just as a license for a child development facility is non-transferable. And finally, the agreement must be signed by OSSI and the facility in order to be fully executed. That covers the content of the provider agreements. Thank you for bearing with us. I know that's a lot of content, but we really want to make sure that everyone understands their obligations under the program. Now, before we get to the Q&A, I'm going to talk about a waiver process that OSSI has recently announced for fiscal year 24. As you may know, last week, OSSI announced changes to the fiscal year 24 Early Childhood Educator Pay Equity Fund program, as I mentioned at the top of the call. And these changes were to address feedback that we heard from facility leaders and early learning stakeholders. As a result of this feedback, OSSI increased the fiscal year CDF payroll funding formula award for all facilities, as I described earlier. This will provide more support during the first year of implementation of the new program. In addition, OSSI announced a waiver process for fiscal year 24. Facilities that are still unable to meet the minimum salary requirements, even with larger award sizes, will be able to apply for a waiver of the minimum salary requirements. Later this fall, OSSI will share information with facilities about how to apply for a waiver, the specific criteria that a facility must meet to be granted a waiver, and the requirements that we will put in place for facilities that receive waivers. While we will provide more details in the coming weeks, I want to just emphasize now that it's important to know that any child development facility requesting a waiver will be required to share financial information with OSSI in order to prove their inability to meet the minimum salary requirements without operating at an unsustainable budget deficit. Facilities will also still be expected to use funds that they receive from the Early Childhood Educator Pay Equity Fund to increase pay for staff, even if you can't increase it enough to meet the minimum salary requirements. There will also be other program requirements. We are really glad to be able to provide this opportunity to providers who need it, but we do not intend to issue blanket waivers. We will only issue waivers to providers who can demonstrate that the waiver really is a financial necessity. As I said, we look forward to sharing more information about this process in the coming weeks and are glad to be able to offer this to facilities that need the support. And with that, I will pass it over to Julia.
Thank you, Hannah. Before moving into our Q&A, we want to do a quick poll to see what language everyone is attending today's session in. So we will launch our poll now and ask you to tell us what language you're attending today's session in. And the options are English, Spanish, and Amharic. We'll give folks about a minute to respond. Alrighty, thank you everyone who answered the poll. We'll now go into our Q&A. And we'll start with a question about when the agreements are going to be sent to providers. I see a few different people asking this question. So when can a facility that either opted in as part of the fiscal year 24 SARA or as part of the fiscal year 24 Early Childhood Educator Pay Equity Fund application expect to receive their agreement?
So again, first, just to remind folks, the deadline for opting in is tomorrow, 5 p.m. on the 15th. After that point is when you will receive either the agreement if you are a non-subsidy provider, or your subsidy provider agreement with the Early Childhood Educator Pay Equity Fund addendum. I don't want to specify the precise date, but again, once you've opted in tomorrow, you can expect as early as next week to receive the agreement. And we'll try to give folks as much time as we can to be able to review the agreement and get that signature in place to have the agreement fully executed.
Thank you, Hannah.
I do also want to remind folks that in the meantime, you can review the sample agreement on our website as well.
Thank you, Sarah. I'm seeing some folks writing in that they might be having trouble either accessing the application in DELT or completing the required documentation for the application in DELT. For folks in that situation, I would encourage you to email the OSSI Pay Equity inbox. We will drop that in the chat. Please let them know that you are dealing with some unforeseen circumstances and the team will help you out. So please do email the OSSI.ece Pay Equity inbox if you are having any technical difficulties or trouble collecting the information requested as part of the application. Our next question is around eligibility. So can an employee who is not a classroom teacher, meaning someone who is in a lead teacher or an assistant teacher, but works at the facility, participate in the program?
So I just want to remind everyone that starting in fiscal year 24, participation in the program will be at the facility and provider level, not at the individual staff level. So that means that individual staff are no longer submitting applications and receiving funding directly. Facilities and providers are applying to participate in this program. Once the facility is enrolled in the program, facilities will receive that money and use that money to pay their staff. The funding formula through which facilities receive funding only takes into account the staff who are covered by the fund. So the definition Hannah shared of teachers and assistant teachers. If a facility has sufficient resources to meet the minimum salaries for those eligible staff and additional resources, they may use additional resources to increase compensation for other staff in the program, whether those are specialist teachers, directors, other people, but they first have to make sure that they are meeting the minimum salaries for all of the eligible staff before they can use funds to support other staff. And facilities may or may not have sufficient funds for that purpose.
Thank you. Our next question is about when facilities that participate in the program are required to start paying their staff the new minimum salaries. So this question says, if payments for Q1 are going out in December 2023, does that mean facilities must pay teachers at the minimum salary starting in December or in October?
Sure. So facilities are not required to pay the minimum salary requirements until after they've received the first quarterly payment based on when they've opted into the Early Childhood Educator Pay Equity Fund program. So if you opt in Q1 and receive the first payment in December, you will be required to begin raising salaries after you've received that December payment.
Thank you, Hannah. Our next question is about the pay schedule that was shown earlier in the slide. So are facilities that participate in the pay equity fund required to have a pay schedule, even if it is not the sample one? In other words, what happens if a facility does not use a step schedule?
The facility needs to have a salary schedule, but it does not need to have steps the same way the sample schedule does. The schedule could have a single pay level for each role and credential combination, with all people in those roles and credentials paid the same thing, or it could define a band where it says the minimum for a teacher with this credential is this salary and the maximum is this salary, but doesn't define steps in between. You do not have to have all of the steps that are outlined in the salary schedule that was shared earlier.
Our next question is, if a teacher is already making the minimum pay wage, will the center get an increase for that teacher? It's not clear if they're referring to the minimum salaries as part of this program or the minimum salaries that are for the district. So perhaps we can provide some clarity there.
Yeah, I'll start on that point, Julia. So there is a minimum wage law in the district that requires all employers to pay a minimum wage that's set by the DC government. And that is separate, however, from the minimum required salaries for the early childhood educator pay equity fund, which were on the slides that were shared earlier. I want to remind participants on the call as well, the facilities are not receiving money based on the current payments, based on the current salaries of their staff. There is a fixed dollar amount that facilities will receive based on the number of staff you have and their credentials in the Division of Early Learning Licensing tool. So no matter what you currently pay an assistant teacher with a CDA, you will receive the same amount of money in your base formula allocation for the assistant teacher with a CDA that you employ.
Our next question, will OSSI share the tuition rates so that directors can better understand tuition across the district?
So we will not be publishing the tuition charged by individual programs as part of this program. However, we are requesting this information to inform district policies that seek to improve the cost of childcare and support affordable childcare for families. So one thing that OSSI may use that for is to publish aggregated data on tuition rates in the district, as well as how tuition rates vary by different features, for example, for programs that serve infants versus toddlers and so forth. So that there are some specific things that we need to do for other purposes that require us to look at what the rates that childcare providers charge are. That is part of what we do to comply with federal requirements for our childcare subsidy program. And part of the goal here is to ask providers to share that information as part of pay equity so that we do not have to go through a separate process to collect that information in the future.
The next question is related to use of funds. So after satisfying the minimum salary requirements, can remaining funds be used for teacher or assistant teacher bonuses? Similarly, can extra funds be used for professional development activities? We might direct this one to the ECE pay equity inbox. I know there are questions also in the FAQ that we have for facility leaders that address use of funds. Let's see, our next question. Again, I'm seeing still a number of questions about when people are going to receive the agreement. Can we just repeat that answer that we shared earlier?
Sure. So there, again, most important date to remember right now is tomorrow, to make sure to opt in by September 5th. By 5 p.m. September 15th, which is tomorrow. After you have opted in, you will then receive the agreement. It will likely happen next week. I don't want to say the specific date or day, but again, in the meantime, that's why we're sharing this information via the info session. It's why the sample agreements are on the OSSI website. So we do encourage you to review this information and the sample agreement so that when you receive the agreement, you will have already been able to understand what's in it. And then we'll have the time needed to be able to sign it and return it and make sure that it's fully executed by the 30th. So again, the agreement will come soon after you opt into the program.
Thank you, Hannah. Let's see, a question here about wage supplement versus the minimum salary. So can you clarify that the wage supplement in the pay equity for the pay equity program is not the amount of money a eligible lead teacher or assistant teacher will receive? Can Sarah, Hannah, can you clarify how exactly staff will be receiving funds and the amount of those funds?
So the wage supplement reflects the amount of money that a facility will receive for each staff person with that credential and role combination. The facility then needs to ensure that their staff are paid the minimum salaries or minimum hourly wages that are equivalent, that are also indicated in the pay equity documentation. So that does not mean the facility cuts a check for the exact amount of the wage supplement. In some cases, the wage supplement may be more than the difference between an employee's current and new salary, and in some cases it may be less.
Thank you. Our next question is about the pay equity fund as well as the minimum education requirements that go into effect in December. So this person is asking, how can a teacher have a CDA if the OSSI regulations require an associate's degree to be a teacher starting December 2nd, 2023?
So as a reminder, there are opportunities for facilities to apply for waivers for staff who do not yet fully meet the credential requirements that will be in effect in December. And so the additional salary levels are provided for staff who receive those waivers. So for example, if you have a staff person who currently holds a CDA but is enrolled in an associate's degree program and you request a waiver for that individual, and you're granted the waiver, that individual would be allowed to remain a teacher and would receive the pay for a teacher with a CDA, not an assistant teacher with a CDA, but would not receive the pay for a teacher with an associate's degree. Does that make sense?
Let's see. Okay, so this question is about facilities that are part year programs. So what happens if a program has opted in and the teachers work for 41 out of the 52 weeks of the year? Or do they receive an adjustment in that pay?
So in that case, similar to if you had a part-time hourly employee, the salaries that the individuals receive need to reflect the hourly equivalent. So you do not need to pay the full annual salary for 52 weeks for someone who only works 41 weeks. You would use the hourly salaries to determine the appropriate amount.
Another question related to employment status. So how does the payroll funding formula calculate for part-time employees? Or does it consider all employees the same when calculating the wage supplement?
Currently, the funding formula treats all employees based on role and credentials the same in calculating the pay supplement.
Let's see, I'm seeing a question here that says, how can we confirm that OSSI has received our application or that we want to opt into the program? For folks with that question, please email the OSSI Pay Equity inbox. They will be able to confirm with you that they have received your application. Some questions we are receiving around offer letters that were mentioned here. When will facilities need to submit offer letters to staff and to OSSI?
We'll provide additional guidance on the process for submitting required documentation once we've completed the opt-in process.
Another question related to offer letters. It says, will we need to issue new offer letters for all employees showing the new wages?
If you change your employees' wages, you will need to issue offer letters or other documentation that reflects that change.
Someone asked if you have already opted in, so I guess if you've completed the opt-in process, you've submitted the application, if you're a non-subsidy provider, do you still need to opt in again tomorrow? You only need to submit one application. If you are unsure if your application has been submitted, either the pay equity fund application if you are a non-subsidy provider, or the fiscal year 24 SARA application where you indicated that you'd like to participate in the program, please do email the pay equity inbox and they can confirm for you.
And if you are a subsidy provider, you can also check in with your education services monitor as well.
A question here about waivers. When do we need to apply for the waivers and how will that be done?
So OSSI will be providing additional guidance on the waivers in a few weeks.
I see a question here. What is the email address for the OSSI Pay Equity inbox? We'll drop that in the chat, but it is ossi.ecepayequity@dc.gov. Let's see. This question is about the CDF payroll funding formula. So this person says, how do we know the percentage rate for the equity adjustment if we are not at full capacity, or how do we know what percentage we'll receive?
That is a great question. The equity adjustment percentage rate is calculated by taking the current number of children that you have enrolled in the child care subsidy program and dividing that number by your licensed capacity, not by the current number of children enrolled in your program if you're operating less than full capacity. Both of those numbers, the subsidy number is drawn from OSSI's subsidy system. The licensed capacity number is drawn from the Division of Early Learning licensing tool. That means that when OSSI actually calculates that number, it will be based on your subsidy enrollment and your licensed capacity as of the day we calculate that, which may be different than what either of those things is today. So keep that in mind, but that is how you would think about those numbers for the purposes of estimating how much funding you may be receiving.
Another question I'm seeing that is about the hiring of district residents. I know that we've received a few questions about this in the last few weeks. So if my facility completes the agreement, will I need to have 51% of any new hires at my facility be district residents?
No. So again, this is standard contracting language and it applies to employees that are hired for the purposes of complying with the agreement. So it does not apply to existing staff. It does not employ to vacancies that you may need to fill. Again, OSSI does not expect that most facilities will hire staff to comply with the provider agreement. So this does not mean that your employees need to have them need to be all district residents.
Thank you, Hannah. Let's see. Our next question is the money that programs receive through the Pay Equity Fund subject to taxes?
Thank you for asking that question. The agreement does state that providers are responsible for the payment of all taxes and fees incurred from any pay equity fund payments. As educators' salaries increase, mandatory employer payroll taxes will also increase. And the provider is responsible for paying all employer taxes and ensuring appropriate employee tax withholding on salary payments to staff. If you have questions about any impacts on your program related to taxes as a result of participating in this program, we would recommend consulting with an accountant or a tax professional. And we would also advise any employees who may have concerns to do the same. Those resources may be available to programs that participate in the Shared Service Business Alliance through Shared Service Business Alliance. So for those of you that participate in Shared Service Business Alliance, encourage you to reach out to them.
I see a question here requesting us to go over the overpayment and underpayment again. Hannah, could you just review that once more?
Sure. So again, this is just in the case that for whatever reason, if there was an error in the calculation or if there was a discrepancy in the actual number of teachers, staffing information and dealt was different than it was in actuality. There could be any number of reasons that the amount that a facility receives may be more than they were supposed to receive or less than they were supposed to receive. So an overpayment or an underpayment. And in those cases, OSSI will correct that. And so if there was an overpayment, we will withhold funds from the next quarterly payments in order to rectify that. And if there was an underpayment, then the following award payments, you would see additional monies in that payment to compensate for the previous underpayment. So again, not something we anticipate happening very often, but just a clause in the agreement to make sure that we all know what will happen in those cases.
Another question about reporting. So this one says, will there be reporting for liquidating the award amount? And if there is, how often?
There will not be reporting for liquidating the award amount. We will be requiring facilities to report to us on the wages that they're paying to their staff, and there will be requirements to submit either audited financial statements or other appropriate documentation of the facility's overall financials, depending on the program size.
This is another question. It says, I currently have a teacher position open. Must that person be employed by a certain date, I guess, to be included in the pay equity fund calculation?
That's a great question. So again, we will calculate the payroll funding formula 4 times a year. And the reason for that is exactly as the question asked. It's that there are changes in facilities through the course of the year. And so we want to be responsive to that. So we recognize that staff will leave and you will hire new staff. And that's the reason for those quarterly deadlines for updating DELT. So each quarter, there is a provider deadline for updating staffing information in DELT. After that deadline, we will run the calculation for that quarter. So if you hire staff before a quarterly deadline, they will be included in the next quarterly payment. For staff that are hired mid-quarter, you want to make sure to update the staff records by the next deadline, and you will see the wage supplement for that new hire in the following quarterly payment.
Thank you, Hannah. I'm seeing a question that would be good to clarify. So this person is asking if we can discuss back payments if the new salaries start in October, but we don't receive funding until December. So can we reiterate the timing around when salaries need to be implemented?
Sure. So we will not require or monitor whether facilities paying the minimum salary requirements until after the first quarterly payment is received. So again, if you opt in for Q1 and get a payment in December, it will be after that payment is received in which you will need to update salaries. Now, facilities may choose to implement the salary increases differently. A facility may choose to increase salaries in October or November, but OSSI will not require the salaries to be raised until after you've received the funding to do so.
Thank you. Let's see, our next question here. This person says, where do you go to opt in? So I will answer this one. The opt-in process needs to be completed by the owner operator of the facility. So if you are an owner operator and you need support finding the link to complete the application process, please email the ossi.ece inbox. I'll drop that email address in the chat again. If you're an educator, there are no steps on your part just yet. You do not need to submit an application to opt in for fiscal year 24. Alrighty, I think we have time for one or two more questions. Perhaps we can address the observations that were mentioned earlier in the presentation. So why are classroom observations included as part of the agreement?
Yes, I'll talk about that. So the district has a deep commitment to improving the quality, affordability, and supply of childcare in the district. And we care about that for all children and families in the district, not only those that participate in our childcare subsidy program or our publicly funded pre-K programs. However, historically, we've only been able to track information on the quality of early learning in the district for programs that are participating in capital quality, which is required for programs participating in subsidy, but not for other programs. Now that we're rolling out an additional public funding stream for childcare, we would like to collect information on quality of childcare in the district across all the programs that receive public funding. However, it's not our intention to use that information to hold individual programs accountable or to report that information publicly for individual programs. It is more a tool for us as the district to track what are the trends we see in quality for the district as a whole. Are we seeing positive trends in overall quality? Is there variation in quality across different parts of the city? How should that inform the policies that we set and the way we target resources for professional development or other investments that we might be making to help facilities improve quality? So for example, there is information that we see in one of the observations we use that showed that language modeling, sort of the quality of language that pre-K teachers use with young children was an area that we could improve on. And so the district has provided a lot of professional development for early educators around language for use with young children through a variety of mechanisms. And we've seen steady improvement in that indicator for the data we collect across the district. As we're collecting more information from more programs, that will allow us to better improve the way that we're supporting improvements for all children.
Thank you, Sarah. With that, I think that we are going to move to closing out. I will remind folks that if you did not have your question answered or have additional questions, please do reach out to us at ossi.ece.payequity@dc.gov. And if we go to our next slide, you can actually see that address there. And with that, I would like to thank everyone who joined us this afternoon. For more information, please do visit the OSSI website. You can find a link here on this slide. We also encourage you to check out the FAQ for Child Development Facility Leaders. This was just updated last week, so take a look. We're hoping that this can help to answer a lot of the questions we've been hearing from the early learning community. And then finally, as we've mentioned, please do email us if you have questions. You can reach us at ossi.ece.payequity@dc.gov. Thank you again to everyone who has joined us. As a reminder, a recording of today's session, as well as the session that was held on Tuesday evening, will be made available on the OSSI website in the coming days, and we will make sure everyone is notified when it's available. Thank you.